Yeah, good morning, everyone. So we had seen some political development in the US, and before that, Friday US market came off again, and futures are though currently bit positive, whereas Asian market are also seeing declining trajectory in line with US market. But we are seeing that there is a further action by Chinese central bank, wherein they had reduced 10 basis point interest rates today morning. So, which was expected that the central bank will keep the things flat. So this can bit support the commodity prices. We are seeing commodity prices also correcting in recent past. Uh, Oil is down by around $1.5 to almost around 83 Brent prices. Aluminum 1%, copper also 0.5, iron ore 0.5, steel 0.5. We had seen Friday good corrections in the commodity prices, and this is further to that. So these declining prices may find some support with China action. So quite possible there could be some restrictions on decline in the prices of metals and commodities. So overall, sentiments are a bit negative, but there is some hope that we may see some turnaround. Tomorrow being budget, so we may not see any sharp decline or up move in expectation of the budget outcome. So people may go light into the budget. We had seen quite a large volatility at the time of the election. So people are cautious in that respect and are going light in the budget. So may find today trade in a range bound manner. Now request technical team to take up from here.
Yes, thank you, sir. Good morning, all of you. This is Swati. Today, the market is likely to open with a gap down opening. The reasons has been mentioned by Sunil sir itself, and we're likely to witness on the technical front some profit bookings during the day. Friday, we have seen that the Nifty has closed below 24,600 levels, down by almost 1%, which gives some sort of a cautious sign. Now, looking towards the charts, we believe that this profit booking is likely to be extended more on a downside towards 24,400 will act as immediate support level. Any move below that level will witness some sort of a correction, which might take a Nifty towards 24,270, 24,100 levels on the downside. Whereas on high side, as I said, 24,600, 24,640 will act as the crucial resistance levels. Unless and until Nifty doesn't surpass that resistance zone, we are not likely to witness some positive momentum during a day or in the coming day. Any move about 24,640 will only attract some buying, which might take a Nifty back towards 24,700 to 770 levels on the higher sides. So we request the clients to book the profits or at least hold your long positions by maintaining the strict stop losses. Coming towards the Bank Nifty, for today, intraday purpose, 52,070 will act as a previous support levels. Any move above below that level will extend a fall towards 51,840 to 51,600, whereas the resistance is placed at around 52,570 and 52,870 levels. Coming towards the Fin Nifty, 23,500, 23,400 are the crucial support levels we need to keep eye on it, whereas the resistance is placed at around 23,740, 23,870. As of now, we are not initiating any buy or the sell call. We'll see whether the Nifty supports the respect the mentioned support levels. Accordingly, we will generate a call during a day. That's it from my end. I request derivative team to take a call forward.
Yeah, thank you, Swati. On the derivative front, see, as I was saying, the last week most of the data was a bit negative, but with the fall on Thursday and Friday, we have seen the data change a little. Apart from the VIX continues to remain high. The open interest has come down, so has the PCR. And this being the expiry week, there is likely to be some volatility. However, good support area is placed around 24,500 on a closing basis. Even though we are opening a bit of gap down today, with the budget also coming in, we might see some volatility, but 24,500 should hold more or less. So yeah, that is an important support on a closing basis. If that is broken, we can see some more selling coming in, but very good support around 24,000 levels for Nifty post that. So yeah, I look out for the same. Your stop loss should be 24,450 for longs. From the stock specific front, oh, there is one more thing that on the options front, we have seen some call built up in the last few sessions from 24,500 to 25,000 strikes. However, we had seen good put built up around 24,500 and lower strikes earlier. So the PCR is now at very stable levels from there. From 1.4, it has dropped down to 1.1, which is quite comfortable at this point of time. So yeah, we might not see the selling that we have seen on Friday. We might just see some buying coming in for Nifty. From the stock specific front, most of the defensives saw buying on Friday, and we expect some more buying in the defensive sectors, especially IT and pharma. Pharma has given a breakout on most of the stocks after a 2-year consolidation, and we are seeing that these pharma stocks have seen a lot of short covering action in the last 3-4 months in every expiry. So yeah, there is a likelihood that these stocks will now continue to perform well in the next few months going forward. So look out for the same. They can be good gainers in the next few days as well. So yeah, as the likes of DV's, Dr. Reddy, Glenmark, Cipla, they can do well. Yeah, so that's it from my side. Like to ask the fundamental team to take over, please.
Good morning. A lot of banks and NBFCs have come out with results over the last couple of days. Firstly, HDFC Bank result was in line with expectation. On the business growth front, the bank disappointed with advances declining by 1% sequentially. Numbers were already out, but still, I mean, even the bank was surprised a bit by this lower growth. Deposits were flat quarter on quarter, mainly because of the bank repaying high cost deposits of erstwhile HDFC Limited. Otherwise, if we exclude the merger, then deposit growth was 4.6% sequentially. It will take more than a year for the CD ratio to fall to levels of its peers, from 105% to below 90%. That is what the management said. People believe that this will be done quickly within this year itself, but seems it can take a bit longer. P&L was stable with NIMs improving by 3 basis points quarter on quarter. Profits were almost flat sequentially with and in line with estimates. Asset quality was stable with slippage at 1.3%, net NPA at 0.4%. We remain positive from long-term perspective. Kotak Mahindra Bank result is broadly in line with expectation. Advances grew 19% year on year, 3.7% quarter on quarter. And bank has maintained that it is confident of growing at this rate going forward as well. NIM disappointed and came at 5.02% compared to March quarter's 5.28%. This is mainly because of RBI embargo, which had an impact on high yield unsecured book, and bank had to deploy this liquidity to in low yielding assets. If we exclude extraordinary income of 3,500 crores from divestment of stake in Kotak General Insurance, then the profits were broadly in line with estimates. Asset quality was stable with slippages remaining at 1.4%. We remain positive from long-term point of view. Yes Bank result is above expectation owing to improvement in asset quality. Advances were flat quarter on quarter, grew by 15% year on year. Credit cost came down to 0.4% against March quarter's 0.9. Slippage have also constantly been falling and came at 2.1% against March quarter's 2.4. Net stressed assets also continues to decline and fell by 30 basis points, came at 4.3%. Only issue in the stock is that it is trading at expensive valuation at 1.7 times price to book, which is above its fair value, we feel. And so despite the good results, don't expect any sustainable move in the stock in the future. RBL Bank result is marginally above expectation due to lower credit cost, which came at 1.8% against March quarter's 2.1%. Advances growth was 19% year on year, 3% sequentially. On a sequential basis, NII and profits were also up in line with AUM at around 3 to 4%. Asset quality was stable with net NPA remaining at 0.7% and slippages also remaining at 3.3%. We are positive on RBL Bank. Poonawalla Fincorp result is above expectation due to improvement in asset quality. AUM grew by 8% sequentially, 52% year on year. Expect this AUM to soften a bit because disbursement growth has come down on a YOY basis. They declined slightly. So this AUM growth will come down going forward. NII and adjusted profits were up by 5% sequentially and 45% year on year. Net NPA came down to 0.3% against 0.6% in March. So this is a seasonally tough quarter. So commendable job on the asset quality front. We remain positive on Poonawalla Fincorp. Credit Access Grameen result is below expectation. AUM and profits were flat quarter on quarter. However, all asset quality parameters deteriorated. GNPA increased to 1.5% against 1.2 in March. 0 plus DPD came at 2.5% against 1.7% in March. There are many state elections lined up, and the fear of loan waivers spilling over to MFIs will remain as a hangover on the sector in the coming 3 to 6 months. So one can avoid the stock in the sector. ICICI Lombard General Insurance result has improved. GDPI increased by 20% year on year. Profit increased by 50%. Combined ratio came at 102% against last year's 104%. Market share improved to 10.6% against last year's 9.9% and March quarter's 8.6%. So on both parameters, market share has improved. We remain positive. Nippon AMC result is marginally below expectation. The mutual fund AUM grew by 12% sequentially against industry growth of 9%. So company gained market share. It has been gaining market share continuously over last few quarters, mainly led by the ETF funds where it is the leader in the market. Revenue and EBITDA grew slower at 8% compared to 12% growth in AUM. The EBITDA was around 6% below estimates. So neutral in near term, but from long term perspective, we remain positive on Nippon AMC. Thank you.
Good morning. On the specialty chemical side, Atul Limited posted the results above expectations, both in terms of top line and bottom line. Top line grew by 11.8% on a YY basis, and EBITDA margin reported at 16.9% versus the expectation of 14%. The stock is currently trading at 44 times to FY25 earnings, and one can hold or accumulate at these levels. Rossari Biotech posted the results, and results were okay. It has seen the stable performance on a sequential basis with revenue growth at 3.6% and operating profit margins at 13.3%. The stock is trading at a PE of 26 times to FY25 EPS and will provide the outlook for post today's con call. On the FMCG side, Patanjali Foods Limited posted the results and results were improved in terms of margins. The revenue grew by 7.6% on a YY basis. Operating margins reported at 5.7% versus 2.2% in the same quarter last year. And it was at 4.5% in the last quarter. The stock is trading at a PE of 45 times to FY25 EPS. Thank you.
Good morning. Wipro reported its quarter one numbers and they were below street expectations. However, company has met its lower end guidance given in the previous quarter. So Wipro gives a revenue guidance in every quarter for the next quarter. So the revenues in the current quarter were down 1% on a constant currency basis. Company's consulting arm, Capco, showed a positive momentum during the quarter, giving a sequential growth of 3.4%. However, it is uncertain if Capco growth can be sustained going forward amid macroeconomic challenges. The EBIT margins for the quarter at 16.5% grew 50 beeps sequentially, and the management is confident of sustaining these margins within a narrow band with an upward bias in the coming quarters. On the revenue front, the company has guided for a negative 1% to positive 1% constant currency sequential growth for the next quarter, that is September quarter. And after 6 quarters of headcount reduction, Wipro has marginally added around 300 plus employees during the current quarter. Though the discretionary spend remains muted, Wipro management has expressed confidence in a better FY25. It anticipates improved performance in the coming quarters, driven by strategic initiatives and deal wins. Stock can be under pressure in near term since it has already run up 20% plus in the past. So, but we are positive for Wipro in the long term. Thank you.
Hi, good morning, everyone. So, Ultratech Cement result has come, and the result was below expectation. Revenue from operations came at 18,000 crores approximately, 18,069 crores versus expectation of 18,388 crores. EBITDA came at 3,039 crores versus expectation of 3,404 crores. EBITDA per ton came at 949.78 versus quarter on quarter 1172.06. EBITDA per ton was lower because of lower realizations and higher one-time other expenses. We also attended the con call. The management said that the fundamental story remains unchanged. And the other expenses during the quarter were high on account of some one-time expenses. It will normalize going forward. WHRS capacity is increasing. The lead distance has further reduced during the quarter. Management also said that the rural demand and the overall cement demand is expected to pick up. And but Q2 will be soft because of the monsoon. Price improvements are seen from the second half. India Cement stake is management said that it's just a non-controlling financial investment as of now. They can't comment more than that as of now. The power and fuel cost is expected to improve going forward. Industry growth in terms of volumes for the full year is expected to be 7 to 8%. Ultratech's expected to be twice of that. So overall, what we feel is Ultratech being the industry leader, I think that the valuation which it is commanding is they can sustain it, and due to the earnings growth, I think we are positive from a medium to long term perspective. Thank you.
Hello everyone, good morning. Fedbank Financial Services result is okay. NII came at 250 crore, grew by 41% YOY and 19% QOQ. ROA came at 2.4% versus QOQ 2.5%. ROE came at 12.3% versus QOQ 12.2%. Provisions came at 35.2%, 35.2 versus 17.7 QOQ. Bank gave some guidance for current year FY25. So the ROE target is 2.7 to 2.75. ROE target is 14%, and AUM growth rate target is 25%. So the outlook for Fedbank Financial Services is positive. Thank you.
Yeah, apart from this, Reliance has declared its result, and the result was marginally below expectations. Mainly, EBITDA came a bit lower than what was expected in the market. EBITDA came in at 287 billion against 387 billion against 396 billion. This was mainly on account of lower lower growth in or decline in EBITDA for O2C segment, wherein EBITDA declined by around 22% quarter-on-quarter and 14% year-on-year. Apart from that, retail has seen 11% growth in EBITDA, wherein the area under operation has increased by 15%. This is indicating that the per square feet EBITDA is declining in retail, and we had seen this consistently declining over a period of various quarters. Apart from that, Jio has reported subscriber growth of around 9% year-on-year and ARPU growth of 0.7% year-on-year, whereas quarter-on-quarter ARPU remained flat. EBITDA grew by 11% year-on-year, so more of an inline set of number from Jio. So overall, market was result was bit below expectations. Coming period, Jio will see ARPU increasing gradually with the renewal of plan of the subscribers. So that will have a positive impact on the profitability of the company. So overall outlook remain positive from a longer term perspective for Reliance Industry. Apart from that, Jindal Stainless has also reported numbers, and the number came below expectations, mainly on account of EBITDA coming lower than expected. That too got impacted by inventory losses. The EBITDA came in at 9,000 rupees versus the last quarter 9,100 rupees. The expectation was that the quarter-on-quarter there will be some improvement in the EBITDA per ton on account of reduction in the coking coal prices. Coking coal prices do decline by $23, and NSR has also increased by 500 rupees, but the EBITDA declined because of mainly inventory losses. Going forward from here in the next quarter, again the coking coal will come down by around $28. And there will be some reduction in the iron ore prices as well, whereas the realization is also seeing some decline. Month to date, the prices of HRC has already declined by around 1,500 rupees. So whatever the gain which is coming on account of reduction in the cost will be netted off with NSR decline. So till date, there will be marginal improvement from for EBITDA per ton from the last year, that is Q1. So overall results are likely to remain flattish in the coming quarter. But what we are seeing then the industry is showing good growth in consumption in India. Last quarter, the steel consumption increased by 14.5%, and then company expect that the industry to grow by around 10% year-on-year in India. Though there is a lower price steel which is coming into India, but what management expect that the price corrections from here is limited as China supplies are also already at variable cost. So further decline in the prices from China is there is a limited scope. So what we see that the near-term outlook is neutral, but considering that there is a good expansion plan of the Jindal Stainless and there is a good demand for the product, from a bit longer term perspective, 6 to 9 month or 1 year perspective, the outlook is positive. Share is trading at 7.2 times EV by EBITDA. FY26, which is also fairly priced at current level. So any good decline from the current level can become an opportunity for the company. So apart from that, Shakti Pump has reported a good set of numbers. The sales has increased by almost 400% year on year and marginally down by around 7% quarter on quarter. EBITDA has also shown further improvement of around 4% quarter on quarter. Last quarter, company had seen very good performance and stock has run up post that performance. And that performance is continuing in the current quarter as well. So the outlook from a near to medium term is positive for Shakti Pump. Stock is trading at around 33 times TTM EPS. So that's all from us. And I'll request commodity team to take up from here.
Yes, sir. Thank you very much. Good morning, everyone. So in today's session, we might see gold testing 73,072,850, whereby some support is expected and a pullback till 73 250 to 400 is expected. From 73 400, one can witness some profit booking and prices can cool off from the mentioned levels. And in silver, there could be some pullback till 90,500 to 700, whereby selling pressure could be witnessed. So one can sell. And on downside, we are expecting prices to test 89,000, 800. So one can sell on rise and also initiate a buy around 88,800 with a strict stop loss of 88,200 for a pullback. In metals, copper, we are expecting a pullback till 825, 830 on upside. So buying around 815 with a stop loss of 810 is recommended. In zinc, pullback till 263, 64 is expected. So selling pressure could be witnessed from these levels, and one can sell with a stop loss of 266. And on downside, 260 is the level we are eyeing to witness profit booking. So one can also initiate a buy from 259 with a stop loss of 257.50 for a pullback till 261, 262. And in crude oil, there could be some pullback till 66, 80, 6,700, whereby selling pressure could be witnessed. So selling with a stop loss of 67.80 is recommended. And in natural gas, we are expecting a pullback till 190, 195 levels. So buying on dips around 177 is recommended with a stop loss of 170. And that's it from us. Thank you very much.